Hey, it's Patti, Scharf CPA and co-founder of Catching Clouds, the leader in e-commerce accounting. And today I want to talk about taxes for Amazon FBA sellers. If you are looking for a video on sales tax, I have a whole bunch of them, but they are down below. That's not what this video is. I'll give you some links down below. You can go check those out. This one is going to be on income taxes. And the reason I'm doing it now is because now is the time that you can actually still take action that will impact your 2018 taxes. So let's get started. All right, so I was not born a CPA. I actually started my first business before I even did any of the accounting thing. So I remember what it was like when I didn't understand any of the numbers, or like I don't even know what a tax deduction is or anything like that. So I want to give you kind of the basics. I want to also remind you that our firm does not actually do taxes, and I haven't done taxes for a long time. I just want to share my knowledge with you, but for your own personal tax situation, you should be talking to your own tax CPA. So there's my disclaimer. All right, so big picture. You are going to be taxed on the net amount of income that you make, not on the amount of money you pull out of your business, okay? So net income is income minus expenses to get your net income, all right? Now, income should be pretty obvious. Income is going to be the money that comes into your business for products that you sell. All right, so if you're selling on Amazon, you list your products, and what the customer is paying you for your products, that is going to be income to you. Any deductions from that income is typically going to be Amazon fees. So storage fees or shipping expenses or whatever else. You know, Amazon has 100 billion of them. And all of those are going to be expenses. If you had no other expenses for your business, no payroll, no postage, no bank charges or anything like that, it was all in Amazon, your net income is going to be the total that you got from your customers minus all of Amazon's fees, right? Easy enough. The issue that you have is you may have sales from January till December, but you might actually collect money from Amazon like mid-January to mid of the following January, and things don't really fall in the right periods, and there's not really good breakout that ties to what lands in the bank. I want you to go watch this video to see what some of the issues are with the accounting, and I would recommend that no matter what size business you are, if you are selling on Amazon, you should be using A2X with either Xero or QuickBooks Online. My preference is Xero. I think it's cleaner and easier, but whatever works for you. If you use these tools together, then it is going to solve 95% of your headaches, because your tax CPAs, unless they are specializing in e-commerce accounting, they don't really understand Amazon, and they're going to pull their hair out trying to figure it out, or they're going to do it wrong. So if you're using these tools and you have them in place, you'll have solid accounting so that they can actually do their job and report your income in the right periods. Or if you're doing your taxes yourself, you're going to know you can trust your numbers. So if you need extra help on knowing how to set things up and like the different chart of accounts and things like that, I actually have a course called Accounting for Amazon. I'll give you a link to that down below. There's also a discount code down below if you want to check that out. But that'll take care of most of your headaches with your accounting. The next biggest headache is going to be cost of goods sold. Okay, so if you don't know what cost of goods sold is, let me tell you. When you buy products that you're going to resell to somebody else, you buy that product, it becomes an asset of the business. It is inventory. Okay, it is not an expense of your business. It is inventory, which is an asset. And then as you sell products, you get to pull a little bit of cost away from that until you've sold all of your products, and then you go buy more products and yada yada. Okay. There is a funky rumor going around that this year, because of the tax plan changes with the Trump plan, that you can be a cash basis taxpayer, and in the year that you buy your products, you can deduct all of it all at once. I don't personally think that's true, and I did a whole video on it. if you hear information to the contrary and you want to take that position, I would say just do so at your own risk. Make sure you watch my video before you take any action. Okay, so let's assume that you agree with me and you have products that are in inventory, you turn around, you sell them, you're keeping track of the costs of the items that you're selling. All you do is you tally that up for the whole year. That becomes your cost of goods sold. Remember, it's not cost of goods purchased, it's cost of goods sold. If your company is a lot higher volume and more complicated and things like that, I actually have kind of step-by-step information on how to do that in my Accounting for Amazon video. And you can use A2X to help with that process as well. Okay, so then after you've got the income, you've got the cost of goods sold, you've got all those Amazon fees, that's really 95% of your books in most cases, all right? So then after that, you want to know what expenses you can deduct. So to deduct just means that you're taking whatever your income is. So in this case, it's going to be gross profit. You've got income minus your direct costs. Whatever's left over, you just have overhead type costs that you need to run your business, so bank fees and different things that I'll talk about in just a second. And then whatever is left over is going to be what you are going to have as your net income. So let's talk about overhead expenses in general. The IRS is going to allow you to deduct expenses that are ordinary and necessary for your business. So basically what they're doing is they're saying, hey, an e-commerce seller in your situation, is that like an ordinary kind of an expense for your business? Is it necessary to run your business? So for example, if you buy a stair climber for your business, they're going to go, would most Amazon sellers need a stair climber to run their business? Yeah, probably not, right? But maybe a fitness studio would. So it's kind of an industry by industry thing. So in general, I would say just use your best judgment. Anything that you're going to be spending money on that's going to help you make money is a pretty good bet that it works for your business as a deduction, okay? So here are some examples. Bank fees, materials and supplies, like packaging and stuff for your business. Postage for sure. Office supplies, shipping expenses, things like that. Here are a few things that are kind of funky that I want to talk about. One is automobile expenses. I know a lot of people who are like, oh, I have my own business, and so I bought this fancy schmancy car, and I'm just going to write it off. Well, that's not really how that works. Go talk to a tax CPA before you do something like that, because really the way it works is you're supposed to only be deducting a portion that's related to your business usage of the vehicle. So like if you're working out of your basement and you're the only one in your business and you're not retail arbitrage, you're just selling online and you hardly ever leave your house, you're going to have almost no business miles and you're not going to have a big deduction for that, okay? Other things, penalties are not deductible. Like if you have fines and penalties, if you park your car illegally and you get a ticket for it, you don't get to write that off because the IRS does not want to encourage illegal behavior. Other things, donations, any political contributions are not going to be deductible. And even charitable contributions, depending on your business tax entity type, you might be able to take the deduction, but it would be on, say, your personal tax return, and it would be subject to whatever limits you have for your personal return. Sales tax. Sales tax is not an expense. It's actually a liability. When you are collecting sales tax from your customers, you have a legal obligation to give that money to the government. It does not belong to you. So you basically hold it, and then when you need to file and pay in your sales tax, you give it to the government. When you spend that, it is not an expense. It's just a reduction of the liability of the business. So liability is just another word for loan. It comes to you. It's loan that you have to pay out, and then you pay it out. Done. There should never be any sales tax expense on your books. And the last one I'll talk about is meals and entertainment. I think they recently changed the rules. I'm not sure how much is deductible now. So check with your tax CPA. But I know that a lot of people will just be like, oh, I've got a business, so I will just start making the business pay for all of my lunches and dinners and breakfasts and everything else. And the IRS does not like that. There should be a business purpose for the meal or entertainment. And on your receipt, whether it's digital or whatever else, you need to keep track of who was in attendance, what the business purpose of it was. You should be, if you have like a physical receipt, this is what I always do, you just write on the receipt who was in attendance, what the business purpose was, and then like I use HubDoc and take my phone, take a picture of it, and it flows into my accounting system. So I would recommend something like that. So I think that's it. If you've got a really small business, your accounting should be pretty straightforward. Just use some common sense. Make sure you keep track of everything, keep receipts for everything. Having just bank statements or credit card statements is not proof of the transaction. So you want to have actual receipts for all of your stuff if you are intending to deduct it. The IRS will disallow deductions if they audit you and you don't have receipts. They'll just be like, oh, prove it. You can't prove it, then done. You just have to pay tax on all that deduction money that you took. So I would recommend keep your stuff together and orderly. I hope you liked this video. If you did, please like, comment, and share. If you haven't already, please subscribe, and I'll catch you later.